Pfizer just reported its Q4 2025 earnings, with revenue of about $17.56 billion and adjusted earnings per share of 66 cents, both above Wall Street expectations despite a slight year-over-year dip in total sales reflecting declining COVID-19 product demand. And for the full year, Pfizer delivered roughly $62.6 billion in revenue, with an adjusted EPS of around $3.22, while reaffirming its 2026 guidance of revenue between $59.5 and $62.5 billion, and adjusted earnings per share of $2.8 to $3, which fell short of many analyst expectations and triggered a drop in the stock in pre-market trading. Management highlighted that operational revenue outside of COVID products showed underlying strength driven by demand for vaccines, such as Obesity, and key branded drugs like Eliquis, even as legacy pandemic products continued to decline. And the most market-moving corporate commentary was on a somewhat conservative outlook for next year, driven by patent expirations and tariff impacts that investors are weighing heavily. On the pipeline front, Pfizer shared highly encouraging mid-stage data on its once-a-month obesity drug candidate PF3944, showing up to 12.3% weight loss after 28 weeks without a plateau in non-diabetic patients, positioning Pfizer to compete in the large and growing weight loss drug market and potentially offset near-term headwinds from legacy product declines. And while the company plans to advance this program into Phase 3 trials and invest in new clinical efforts, the near-term earnings guidance has left investors cautious. In summary, Pfizer beat Q4 earnings and delivered solid results, but investors are focused on the modest 2026 outlook, product lifecycle transitions, and how new innovations like PF3944 could shape long-term growth in a competitive pharmaceutical landscape.
Thanks for tuning in. For more stock earnings, like this video and subscribe to Stock Scoop Shorts.